This is Alan Bush with the Daily Financial Forecast for Thursday, August 9th. Stock index futures starting out higher today, and it looks like we're not that far from new record highs in the S&P 500, maybe 15 points or so away. As earnings season winds down, it appears that traders are focusing a bit more on the better than expected earnings situation than on the ongoing trade wars. This is kind of a surprise, I think, to most analysts who thought that the trade wars would dominate, and they have from time to time. And of course, there have been some downdrafts with negative trade news, but it does appear that the trade situation is not having as much impact as it had in the past. Hopefully that is a sign of higher prices to come for the indices. In any event, stock index futures performing very well in a period where there could have been some sustained downward moves. Moving over to the currency markets, the dollar index a little bit higher, the euro currency a little bit weaker. Some of the strength in the dollar linked to ideas that there's a very strong possibility that the Fed will raise interest rates at its upcoming meeting on September 26th. Also, it looks like there could be another rate hike in December. Also, we are seeing the pound steady today, but after falling yesterday below the 129 level as Brexit fears continue to undermine the value of the UK currency. Also, it appears that even though the Bank of England raised interest rates recently, there's talk now that they will not be in a position to hike rates anytime soon. In fact, a few analysts are saying that the Bank of England could lower rates sometime next year. I'm not in that camp. I'm just thinking, though, that the Bank of England will not be able to change policy anytime soon. The Canadian dollar lower in spite of higher crude oil prices. We did have some negative numbers on the Canadian housing starts. Interest rate markets a little bit higher. However, it still appears that the long-term trend is still lower as the Fed likely to raise rates, as I mentioned, possibly 2 more times this year. Still appears that the global economy is in relatively good shape in spite of the ongoing trade situation. So I think rallies that we do see in the bonds should be used as selling opportunities. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.